Alrighty, good morning, everybody. How's everybody doing today? It is January 5th, Thursday, and Mark is not going to be running the room today. My name is John Novak. I am the developer of the software, and looking forward to spending a couple days with you guys and giving you my perspective on learning the software, using the software, trading the software, everything that you need to hopefully be successful with the software. Um, First things first, I want to just give me a quick mic check. Can everybody hear me? Can everybody see the stream? Everybody happy with all that? Just make sure everything's running fine on your end. Alrighty, good morning. If you guys would just give me a quick mic check, make sure that everybody can hear me. Very good. For those of you guys watching on YouTube, if you want to chat, you need to be inside of our Discord. So go to Nexgen Software website, nexgent3.com, and go to the education page and log in that way. The chart that we're looking at, guys, you don't normally use a 21-3 chart, some of you, when we get started. You know, I like to use it. I'm going to kind of give you guys the way I do things. And, you know, this is usually where most people end up. There's three phases to where you're going to be. You get the beginning phase when you're first getting started and you're just trying to figure out what the heck is going on. And Ron C., I saw your note. It's not. It's just a chart template for NinjaTrader, so it's not dangerous. Just so you know, I appreciate you posting that. For me, I like to step back just a little bit and take a look at the market and say, hey, what am I looking at as far as, charts, and what do I see? And, this is going back to the overnight. You can see this little line right here. This little line right here is midnight. And, when you go back to yesterday, yesterday was one of those days where, they had some really good range and there were some opportunities in there. And then, we're kind of in between this little area, if you will, this decision area. So if I just drew a box, I mean, this is pretty much it right here. And, everybody starts off the year and they're like, are we going to trend up? Are we going to finally start going up? Or are we going to keep going down again? And I know Mark talks about this a lot, the battles that happen between key areas. And that's, kind of what we're at on a bigger scale here right now. The trend is going to reestablish itself, either up or down, in the long term, daily charts and stuff like that. When you're day trading, you don't really care what the long term trend is, do you? You want to know what's going to happen in the next 20 or 30 minutes and how do I get paid and let me be done with it. So just, again, everything that we're going to do is going to be chart reading, rules, saying, you guys are thinking you're going to get something different, but it's not going to be different. It's going to be the same thing. Might have a little different spin on it than the way Mark's teaching you, but let's just read this chart together. And again, you guys stop me if I'm wrong. We'll go through some of the user guide and stuff, but my goal today was not to necessarily go through the user guide and kind of do a 101 the way Mark does it. If you guys are really interested in the 101 educational side of things, you can go back and watch any of Mark's classes that he's recorded. There's so many of them, and it's the same thing over and over. You have to, at some point, take that next step. And, the next step is creating your plan, you know, and everybody does the same thing, so I don't want anybody to feel bad about this. My plan is the Nexgen plan, right? Has anybody said that before? And my plan is I'm just going to do what Nexgen says. And that's not really your plan. I know it sounds like it might be your plan, but you know, when you really get into the nitty gritty of making your plan, it's going to take on a whole new meaning. And we'll go through it together. I'm going to help you guys walk through it. And I'm going to show you what I did with my plan. And we'll go through my plan and we'll talk about what's good, bad, and things you can use and things you probably shouldn't use. But again, everything that we do starts with chart reading. And, you know, I really had a thought today that we would go through some of the Discord stuff together. And I really think that in going through some of the Discord stuff, can you guys see? Type in the room if you would for me, because it's going to be helpful since I'm not technically going to be in the room when I do this. Can you guys see the Discord, or do you still see the chart? So that's what I'm looking for. Do you still see Discord, or do you see chart? I guess I should. Let me get back to the education room so I can see you. You see chart and Discord? Both? Okay. All right, so it was a teeny tiny little chart and then the Discord, right? A window inside of a window? Right, okay. All right, I'm just making sure. I haven't streamed with this, believe it or not. You know, Mark was on since we started this. So my goal was hopefully to go through the Discord education. And that's really what I was wanting to primarily focus on first, is the Discord education, and then we'll talk about plans and rules and things of that nature. Right. Big chart, little Discord. Okay, we're going to work on this. I guess I can just switch what we're seeing. We'll leave it alone. Anyway, look, chart reading. Okay, there's some things that are absolutes, 100%, literally. Can I just put PSO? And that means what? Pivot stop out, right? I think everybody understands that. Everybody okay with that? Pivot stop out at fibs. This is one of those termination conditions that is absolute. Meaning the second that the price gets back above here, you're not going short no matter what happens. And, you know, again, whenever people look at fibs and look at, you know, we're not just looking at a pivot stop out. Everything that we do is trigger line location. So when you're looking at a pivot stop out at fibs, at, you know, the little one-to-ones. Did everybody understand what these little pink one-to-ones are? I put, just so you can see, in the advanced chart reading section, I'm just going to pull up the Discord here. In the advanced chart reading section, I put together a lot of pictures for you guys that you're going to be able to use, but let me just open this one in a browser, and then I'll get rid of this, and we'll go back to the chart. All right. You guys are going to have to bear with me a second as all right. Can you guys see chart, or can you see picture? I'm going to have to work out my chart. Tag nabbit. All right, hang on a second. Chart, picture on phone. Okay, y'all give me half a second here. I don't know how the heck to. I'm working on it on my end, guys, so bear with me here. So you guys are going to have to hang tight for a second. I'm just going to figure out what the hell I can see. All right. So on my end, I see the ABCs. On YouTube, I see the ABCs. So I just need to figure out how you guys can see. Bear with me a minute. I'll get through this. I share my screen, change windows. There we go. What do you think? Cool. All right, now let's see if when I change it, if it goes back to my chart. Huh. You know, it follows that around everywhere. God dang it. Okay, bear with me. Okay. Now. Okay. I'm working on it. I can switch it to a screen. All right, give me a second, guys. Sorry about this. I wanted to just do the screen, which I've got the screen now. But I want to be able to go back to my charts. There we go. All right, I will have to edit that out of the YouTube. All right, so now you guys can see ABCs all over the charts. And just to double check, now you can see charts. Okay. We are good. Y'all ready to start over? Newfangled technology. All right. All right. So, again, look, you guys already know what the large ABCs are. You know, where you have the yellow one-to-one dots, and I think you guys use these quite a bit, right? Obviously, termination areas and support and resistance. Inside of the T3 Fibs ProTrader, you can turn on what's called small swing one-to-ones. And the difference between the large swing and the small swing are the large swing wait for significant higher lower pivot trend changes before calculating one-to-ones, and that's why they're bigger. And then the smaller swing one-to-ones will calculate a little pink, you know, or you can set it up obviously for whatever you want. Mine are pink. One-to-ones that measure the distance from A to B, and then after the retracement of C, project out 100%. So it's 100% projection of the distance from A to B added to C, and then you get 100%. And then it starts over. And so you have a new A pivot, then a new B pivot, then a new C pivot, and then it projects 100%. And then you have a new A pivot, then a new B pivot, then a new C pivot, and it projects 100%. And then vice versa. You start getting higher highs, higher lows, you'll start making one-to-ones that go the other way. And the point being is that when you have one-to-ones and they happen to land at Fibonacci areas and or pivot stop outs, you know, this starts to create a layering effect. And then that's really what we're looking for. We're looking for 1, 2, 3, 4, 5 different things to all agree at the same time. And that's when you end up with either a trade or a top or a bottom. And that's all there is to it. It's really not that difficult. It's just waiting for all of these things to come together. But for us, it's very important when the price gets below the line and then back above the line that we're asking ourselves one simple question at all times. How about this? Location of triggers. And, you know, I watch the room. I do watch you guys, believe it or not. And, you know, this is one that just slaughters people 9 ways to Sunday, because they'll get in and they'll say, why did I lose? All the triggers were down. And the reason why somebody would lose a short trade, even, you know, and again, look, to put it in context, this is what it looks like when you're going into that area. So just to kind of get a little excessive with it, doesn't that look like, and you guys tell me if I'm mistaken here, but doesn't that look like the strongest 2 trigger lines down that you've ever seen on God's green earth? That is literally the strongest trigger line on the planet. You're like, yay, I'm going short. I'm going to make more money. It's going to keep going. And the rule says that when price gets below, I can pull up a rule here. Hang on. Let me see. Inside the termination conditions, it says, and again, I'm going to go through little teeny tiny rules. And when we put all this together, you guys are going to, you're going to see it's not very difficult, but it's going to take you a little bit longer than you thought to be 100%. So watch. The rule says, and I quote, when price trades below a divergence line and then price is physically back above it. So everybody give me a Y in the room if you understand what I mean by price gets below the little line and then price is back above it. Do not take short trades. Now, this is compounded and exacerbated, if you will, when you have fib support, one-to-ones, lots of other things, and then you add to it trigger line location. You know, which we talk about trigger line location a lot in the material. Because when the triggers do not get below a line, it means that the line might hold. It might not, but it might. So if somebody says you might blow yourself up if you play with gasoline in a match, right? You might not, but you might. So when you're talking about your hard-earned cash, do you want to take a chance? So again, as we look at this chart, you know, this is an example of it looks down in the moment, and that's how people get sucked into doing the wrong thing, because they don't have a rule that says the minute I get back above that line, it's no longer worthwhile to go short because the triggers are also above that line. And, you know, again, now this creates opportunity. And again, because you know that you're not going short, what's the opportunity? Well, if things roll up, go long, right? I mean, that's pretty much it. If you have a good bottom and then the trigger lines roll, you're going to try to find a long trade. And again, you know, we get the same situation at the top, termination wise. what I was saying about one-to-ones is that one-to-ones are just a measurement, Edwin, of A to B and then added to C and then project out in the future. A to B, added to C, project out in the future. Now, you're going to see them on my charts and my templates today, and that's why I don't want anybody tripping out and saying, why don't you have a little pink dot on your chart? So, all it is a little one-to-one, and again, they could be useful to help you with an entry or maybe a first profit target. So, I'm not changing anything, but look, you guys are normally used to the large yellow one-to-ones, correct? That's it. A to B distance added to C. Anyway, so just think of it as a one-to-one, not really what creates it. How about stop going short if you hit one at blue fibs with a pivot stop out? Is that better? Doesn't really matter what made it, you just have to know what to do with it. Now, when we read our chart again, we're going to talk about the same exact thing, right? When we have multiple fibs, and this is why, you guys have to understand Fibonacci work has been around for a long time. Robert Miner wrote the book Dynamic Trading way back in, before there was color TV. And he did a lot of Fibonacci price and time work. And, the guy that taught me Fibonacci learned from, a lot of Robert Miner's work. And look, it's just a function of layering things together until you have a confluence of lines that all say the same thing. So when we look at our software, and again, look, it's pretty freaking amazing. I wrote it, and I want you guys to understand, I'm still surprised every day at how freaking awesome it is 20-something years later. It's not the software. It's you that we have to fix, okay? Because the software works great. It's not the software. It's, I've never had anybody say it's the software's fault I'm losing money. It's the inability to follow rules. So what we have to do is we have to try to simplify stuff enough that you can follow the rules every time without worrying about it. The very first thing that, let me see if I can get away with this. All right. In the self-training info, you guys can see this, right? This right here is the freaking mother lode of everything you need to know 100% from A to Z. If you are brand new to Nexgen, this is everything you need to know. If there's something I'm missing, then we'll have to go through it. I mean, obviously, between the self-training section, the chart reading, and then I've started to add some advanced chart reading section on here as well for you guys. If you go through these sections and then participate in the education room, you can absolutely win. 100% of the people can be winners with our software. Not everybody's going to be. I'm just going to throw a disclaimer out there because there are some knuckleheads, and look, we've all been there. I've lost some money. Mark's lost some money. Everybody who trades loses money in the beginning. It's kind of like the Matrix, right? Everybody falls the first time. And what you have to do is you have to go back and you have to say, what did I do wrong? What did I do right? More importantly, what are the winners doing? And, you guys have to answer one simple question. What do you want to do? What is your end goal? Right? Because if your end goal is to make $500 a day, then what we have to do is figure out what's the least path of resistance to do that. If you want to make $10,000 a day, what's the path of least resistance? So as you go through this self-training education, obviously there's a link to this class. You're in there now, so you don't need it. Again, I've put a lot of pictures in here that are really, really, really simple. This right here is the trading plan. Regardless of the little nuances or the tweaks or the little things that you put in here, this is it. The holy grail of all things, period. If you have a good top, you're going to try to find the first short. If it's trending, you're going to find a short in the middle. And if it makes a good bottom, you're going to try to go the other way. If it's trending really hard the other way, you're going to try to buy a pullback. There is nothing else, guys. Everything else is a slight variation of this. This is your trading plan, period. It's everybody's trading plan on the whole freaking planet. So when you're looking at, and again, you guys can start going through this section, but if you go through this section from top to bottom, I think it's really, really, really important. I put this picture in there the other day, not a while back, but I made a little bit of a tweak to it. I think this is a really, really, really important picture for new people, for old people, for every people. Have you guys ever heard the term simulator millionaire? And then the minute you start trading live money, you suck ass and you can't trade your way out of a paper bag and you lose. What happens is, and again, I just kind of wanted to make a little graphic to this. When you have zero risk and you're on the simulator, you've got balls or ovaries of steel, right? You're the bravest person on the planet. I'll just leave my stop alone. Fuck it. They won't come get me. Ha ha ha. And then it wins. And you're like, ha ha. And then when you start risking real money, you're like, oh my God, I got to get my stop there quick. They might get me. Oh my God, I might lose $100. The more you risk on your trades as a percentage of your account, the more you're going to screw it up. And I want you guys to hear this because it's really, 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 really important. And I put some time perspectives on this as well. Because, if you just bought our software, and there's some of you guys who are brand new, I want you to have a realistic expectation of where you're going to be. You're going to start off at the simulator, and you're going to have zero risk and 100% calm. You're not going to have a lot of knowledge because the knowledge is going to grow, but what will happen is it's going to take you 2, 3, 4, 5, 6 months, and then you're going to be ready to trade live money. Now, are you guys disappointed already? It's going to take you 6 months. My sister-in-law is here, and she spent so much time working in the ER and emergency room. And I said, look, I want to be a doctor, and I want to be an ER trauma surgeon. And I want to go in the ER and I want to buy the best books and I want to start chopping up people and helping them out in like 2, 3, 4 weeks. And she just laughed. I'm like, no, you can't be a surgeon or a ER trauma doctor if you've only got 2 months worth of experience. Right? How long does it take to truly be a great surgeon in the ER? And you guys want to make $1 million a year and you want to do it in 3 weeks. Stop it. You're not going to. I want you to realistically get your mind right that this is a profession that you can make a ton of money for the rest of your life once you build the skills. But it's going to take you 6 months before you're ready to trade real money, 12 months before you're really at full speed, and then 18 months to 36 months to be about as good as you can be. It's okay, to take that long. There's a couple of really important things that are in here. And again, look, this is it's a trend trade, right? Everything's going up, buy a pullback, get out at a target. So I'm not going to go through that. This is the one that you guys hate the living piss out of. For some reason, and I don't know why, and I can't figure it out, and it's the bane of my existence with Nexgen. Why won't you guys use a checklist? And I want you to think about that question and I want you to answer it, because there's 12 people who are really, really good about using the checklist and they make money every day in the education room. And then there's 72 people that sit there like a bump on the log and they don't do it. Why? You have to use a checklist or you're going to probably fail. So here, let's take a poll. I want to see, by show of hands, who wants to be a failure? Anybody? Raise your hand. Because when you don't use a checklist and you don't post pictures in the class, you're saying, I'm so effing smart that I don't need to do what I'm being told to be successful. Look, we want to sell software. Sure, we make good money selling software. That's great. But we're not in business for 23 years because people lose when they do it right. We're in business for 23, 25 years with the software because what? It works. You're the one that doesn't work, and we have to fix it. So you have to commit to doing a checklist. I know Mark begs you guys every day. I hear him. Show me your rules, show me your rules, show me your checklist. If you don't have a checklist, make one. We gave it to you, right? Does everybody have one? Just say, yes, I have one. That's all I want. Just say, yes, I have a checklist. Cool. All right. If you use it, you're going to probably win more than you lose. I mean, there's no guarantees in the world, but I can guarantee you without it, you're probably going to lose. So that's a bad guarantee. Anyway, I want to finish this self-training thing real quick, and then we'll kind of go on from there. Everything you need to know is in your checklist. I'll go through my checklist with you guys today too. So, is the market coming from a good top or bottom? This video, let's see, where the heck is my video? This video right here is one of the most important videos you're ever gonna watch. I thought about what else can I do to make that video better, and I don't know the answer to that question yet. I'll keep searching, but to be able to have a good top or a good bottom, and does everybody understand what I mean by the word good? High quality top, high quality bottom, and going to the chart that we're looking at here, that's this down here, this box I drew at the bottom. 1-to-1s and fibs and pivot stop outs. And these are all the things that make a really good bottom. And then when the triggers roll, you get one chance to go long. Here, watch. And then watch. If you just wait for, again, look, we'll label this. If you just wait for a good top or a good bottom, so we'll call that a good bottom, and then we'll say one long trade after the triggers roll up. Is that good enough? Everybody okay with that? Now, do the opposite. Wait for a good top. And then, and again, let's quantify why it's a good top. A whole bunch of red lines, 1-to-1s, no triggers, past it. Everybody okay with that? Now, you don't know it's a good top right there. There's no way to know it's going to be a good top. Who gives a rat's ass? You don't know. You're not guessing the top. You're going to have one short after the triggers roll down. So if an area holds really well and then the triggers roll down, you're going to get one short, hopefully somewhere. So if you were awake at 4 o'clock this morning and you took one long trade, and then at 8 o'clock you took one short trade, would you be done for the day? Now, here's the question. How much money do you guys want to make? Everybody put a one contract number in. Type in, if I can make $400 a day or 300 or 500, what's your number in one day? How much do you want to make? Just on one contract. You can trade 100 contracts if you really want. I don't care, but just one contract. What's your number? Okay, so on one contract, you want to make 500 bucks. Let's just say 500, round number, okay? So, does everybody understand now the concept of good bottom, good top? And then one long after the smalls roll up or down. Everybody okay with that? Easy enough? So, this price right here, let me get my little. So, look, this price, give or take, is about 38.66. Okay. Now, the first time we hit the first line was 74.50. And then the second line that we hit was 82.75. What let's call it 83. Okay. So from 66 to 74 added up. That's 8 S&P points. That's $400 right there. One contract, one trade. If you held a second contract to the next fib and you got 83, you're looking at a lot more, right? 17 points. What's 17 times 50? 850 bucks? It's early. I need another cup of coffee, but 850-ish. So you make 400 bucks and then you make 850 and then you're done for the day. So that's averaging 625 bucks on on two contracts, right? But per contract. Now, what's the problem that you guys have? Number one, you were sleeping, but number two, you don't have that in your plan, do you? So let's just say hypothetically you have a good top and then you sell a pullback and hope for the best. Can you make your $400 going down this way? Here's my logic trap. Can't win every day, so I need more than an average day on a good day to cover. Edwin, bullshit. You can win every day. You can. There's almost no days you can't win. So, again, you might have to do a little bit of a tweak or change or something to your plan, but there are some traders and they're not, it's not the majority, but there's a lot of Nexgen traders that just don't have losing days. But, they're really, really solid in their plan. Anyway, there are some days that are better than others for sure, and you have to be good. So, you guys, again, look, what happens if we break fibs and the triggers are going strong? Do you get to go short again? I mean, that's pretty much the rules, right? Tell me if I'm off base here, but if all the triggers are strong and you break fibs, can you go short again? And then if you just got out at the fibs, got out right there, and then said, if they break again, I'll do it one more time. So you guys haven't had any 5-1 charts. Has anybody seen a 5-1 chart out of me today? One chart, a little bit bigger, and I think you guys could make your 400 bucks. What do you guys think? Now, there's a lot of our clients who've adapted this thought process, and again, the things that we teach you and the reason that we teach you on smaller charts is because you would be bored as hell and quit if you waited for the 21.3 to give you the perfect trade all day long. You would have a 2-hour class go by and there wouldn't be one setup, and you'd start, there's a guy in there, it's like, oh, I didn't get to see a trade the other day in the 30 minutes I was in the room. He cried, actually. I said, dude, there's not a trade. We can't make a trade if there's not a trade. You have to be available for it, and if it's there, you can take one, and if there's not one, you can't make a trade just because you have to go to work in 30 minutes. Anybody have that problem with their trading plan? You try to make a trade happen because you got to go to work or you only have an hour left and you need to make your money and you got to hurry and get out of there, and then you lose. I know it sounds familiar. Now, the 5-1 chart is great. That's what we use, the 5-1 chart, to fine tune the entries. All right? I mean, you still have to have a 5-1 chart. So, again, there's nothing wrong with a 5-1 chart. But I want you to see, in that bigger perspective, look what happens on the 5-1 chart. So this is that spot that looks so perfect on the 21-3 on the 5-1 chart. Can you guys see this? Now, I have an extra trigger line on my chart. I have a 21-3 small trigger, but this is what you guys spend your day staring at, and you're wondering why the hell you feel confused. So look, I'm going to put it in a better perspective. Everybody okay with this? Watch. I want to change just some of the thought process. We'll make it long green, and we'll make it really big. Everybody okay? Look at the visual of this circle. And now look at the visual of this circle. Same circle. That's the same circle. If you guys are having trouble with your trades, you're looking at the wrong chart first. Now, there's nothing wrong with a 5-1 trend trade, as long as you have a good top, good bottom, and strong triggers on your 13-2 chart. But they're again, look, this is where you guys are going to make a decision on how much money do I want to make, and what's the easiest way for me to really make it without all the stress and the work. And a lot of people just say, look, a larger chart and, hopefully it works is the better way for me to go. Now, as we get into 13-2 chart, again, look, as we go, let's go back now. Since we, we actually wrote all of this stuff on the 21-3 chart, did we not? All this text was from our 21-3 chart work that we just did. So the pivot stop out, the one pullback to the triggers, the money, the good top, all of this was written based on a 21-3 chart. I'm not telling you you have to use a 21-3 chart, because you don't. But look, same words because they're superimposed on the other one. Look what happens when we get to the 13-2 chart. So, yeah, we missed the fib by a couple of ticks here, but obviously the 21-3 pivot stop out and 1-1s helped us out. Now, what was our trade setup? Our trade setup, does this look familiar to you guys? This should look just like the trade. We haven't even looked at what it looks like on a 5-1 chart yet, because it doesn't freaking matter. I mean, you can use the 5-1 chart for entry, fine tuning, and exit management, but when it looks like this, do you need a 5-1 chart? Really? Am I messing with your mind a little bit? I'm not saying get rid of your 5-1 chart, because I'm not getting rid of mine. I'm just giving you another way to think about your charts and slow your roll and make sure that your large chart says the right thing first before you start staring at your smaller charts. Because the smaller charts will cause confusion if you have, it's like, let's say you're going to take a trip to Paris. I've never been there, so I have no clue. Okay? I'm going to Paris and I'm going to get on the plane in, Miami, let's say, and I'm going to go to Paris. That's a very broad statement, right? Now, when I get to Miami, I have to figure out the roads to the airport, my gate, all the little particulars. When I get to Paris, I got to figure out, airport, hotel, all the little streets. But, the big picture is I'm going from here to there. This is what you have to get in your head first. I'm going from here to there. It's almost guaranteed. And I'm going to make a trade and not jump in and out, in and out, in and out, in and out 37 times on my smaller chart. Because commissions will eat you up. Now, the same thing holds true, coming off of the top. If I have a good top and I have an opportunity for shorts, I'll take short trades. And again, you're going to see the market, especially lately. This was news, but this pullback right here, just to put it in perspective for you on the 21-3 chart, was this pullback. And I think, look, I'm a big fan of using the 21-3 chart to help with the bigger picture. In the chart reading section, which if you guys have been through this, and again, I'm kind of going back and forth to this because I want you guys to see where some of these good things are. When you go back to your chart reading section and you're looking through your charts, let's see, I don't know right off the top of my head where it is. But you're asking yourself a question, right? So this is a 34.5 and a 21.3 chart, but it's the same idea. If the larger chart says that the midband and fib are going to hold, then it usually does. And that's all we're doing. This is a 34.5, 21.3 chart combo. See if I have a different one here. This is a 13.2 strong trigger midband fib combo. So a 13.251 combo. This one is a 21.3 strong trigger, which says the midbands and fibs should hold. Which, again, then how do you get into a trade? You got to work on entries. Entries are on the 5-1 chart, guys. So I'm not saying get rid of your 5-1 chart. But, if you're only looking at a 13.2 chart and you're only doing 5-1 trend trades, what are you going to do right here? What are you going to do? You're going to do nothing because it's not one look, right? So, again, I just want you guys to think about, as you start to expand with our software, stop staring at the little charts and spend a little bit more time with a 21.3, 13.2 combo. Everybody okay with that? Everybody give me a Y if you're all right with that. Just add it. Maybe even add it before a market flow chart. There's only so much you can handle in the beginning, and I don't want you to do too much. But again, look, when you're looking for just strong triggers, all of this move happened and you got none of it. You might have had 1 or 2 trades in here. We'll go back and take a look. But the idea is to get, again, higher probability trades. All right. I lost one of my charts here. Bear with me. There's that 5-1 chart. And again, so look, let's go back and let's dig out the 5-1 trend trades. Can I go through something real quick with you guys? I want to make sure that you guys are okay with this. On my chart template, have added a 21.3 small trigger. So do you see this little line right here? And it's right here. That's a 21-3 small trigger superimposed on the 5-1 chart. And again, I use the 21-3 chart, and I think it's, I think for me personally, it's very helpful. So you have to have rules for stuff. Now, remember what's going to happen if you're on the 5-1 chart and you're brand new. So, again, I want to put this into what you guys experience and why you get pissed off and frustrated, and then all of a sudden, other people are winning and you're like, how did they win and I'm over here losing? So I'm going to start with the 13-2 chart, or the 21-3 chart, just like we did. Okay, I'm going to go back and we're going to start at the bottom. Is everybody okay with this as a good bottom? So fibs, 1-to-1s, pivot stop out, no triggers below, then the triggers cross up, and then maybe we get a long trade. So I think everybody's okay with that, right? So we're going to look at that same spot with the 13-2 chart. So again, it's really, 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 really similar. Now, I had a client who said, I'm only going to trade when the 21-3 and the 13-2 agree. And he only averaged 5 trend trades a day, but he was at 87% winners. Is that for you? I don't know. Maybe it is, maybe it isn't. But I want you to see, here's the question I have for you guys. When you look at this, knowing what you know about trigger lines and strength and fibs, is there any reason why this should be skipped, hesitated, exited, or anything else? I mean, it's pretty much the most perfect mother lode on the whole planet. If you're going to bet a body part on a trade, this is the one to do it on. Okay? So I'm going to put this in yellow now, just so we can see the difference, okay? I'll make it in yellow, so when we go to the 5-1 chart, you'll know where it is. This is what happens on the 5-1 chart. You're going to get in right here. Does that look like a pretty fair entry? Mid bands and fibs inside of the triggers. You're going to be like, yay, I'm in. And then when you're new, what's going to happen? Your butt is puckered up so tight that you want any reason to get out of the trade because you don't want to lose. Now, in reality, the 21-3 chart and everything else says we're going up here. So you have to have that in your mind. Because when you start staring at your 5-1 chart and time ticks by and you're like, yay, and then you get a second divergence, you're like, oh shit, I'm out. Right? You're out. You made one tick. And then the minute you get out, what happens? Well, but here's, look, this is where everything comes together for those who can do it well, and then those who, you can't make your sole decision based on this 5-1 chart. You timed your entry, but you have to also go a little bit further and say, should I hold through a divergence? And if I do have to hold through it, where do I have to risk in order to be out of the way? Is it worth still, it was worth 2 or 3 tick, 2.5, 3 points risk when you got in, right? So did anything change? And that's really the big question that I always ask everybody when, we're looking at charts. what changed on this chart to make you change your mind to get out on the little chart? Nothing changed at all, 100%. So again, you know, this is where in the first week you may jump out only to watch it go up. And you may say, man, you know, what did I do wrong? And there's actually a section in the management, a picture that says, if it looks like this, hang on for dear life because you're still going to get paid even if you have a lower divergence. I can show you the picture in there, but it doesn't really matter. You have to have this context of a good bottom, and you have to have this context of a good bottom. And it's because of this down here that you're going to be brave to hold through a little teeny tiny 5-1 divergence. Does that make sense? Without that context, and that's why I said that this video is one of the most important videos that you're going to watch. The Trading the Edges video. Watch it again. Because when you have a good top or a good bottom and strong triggers, it almost always goes. It doesn't always go, but almost always. And you guys have a checklist, right? When you guys are trading, somebody put a copy of your checklist in if you have one real quick. It should start with, do I have a good bottom? And if you have a good bottom on a 21.3 and you have this look on the 13.2, you're going to stop jumping out just because there's a little divergence on a 5-1 chart. And you're not going to miss all the money. All right, here, watch. We'll get back to live. This is a live market. I don't want anybody to think we're not going to watch the live market here, but again, look, everything has to have context of the larger chart first. Oh, can you guys see that okay? Everybody okay with, you see my chart? Just double checking. If you don't have context of what just happened before, all right, Gary, so look, very first, no counter trend trades, good tops or bottoms on the 13.2, all right? Now, as you expand that, you might even say if a 21.3 and 13.2 have a good top or bottom, it might change your perspective just a little bit. All right, so what is a good bottom? Let's just ask ourselves a question. Isn't a double divergence pivot stop out a good bottom for us? It's not a good bottom down here. I want you guys to understand something. There's no way on God's green earth, when you're in this spot right here, you're going to see a good bottom. You understand that? There's no way you're going to see good bottom. You're going to have gone maybe short at the fib, at the edge, if you do edge trades, and then you're going to get to a prior divergence line. But look, this is the moment in time right here. Can I draw that little circle? This is when it's termination, no more short trades. So right there. Because remember when we trade below it and back above it? So even right here, probably too. So the minute we get below it and back above it, usually it's a termination. Now, I want you to also see something else. Trigger line location. I'm going to have to search for this. It might take 2 seconds here, but let's do this. There's a little pattern that we teach you guys. And again, I don't think everybody always, there's a lot of stuff that we go through that I think a lot of people miss. So I want you to see something. This happens all the time, always and forever, just about every single time. All right, can you see this picture? when the triggers are outside the large or even inside the large, it's not that big of a deal. It's going up or down, right? It's when the small triggers make this little hump below the large triggers, and then the next one usually will terminate the trend. Here, let's look. I think the next picture has it as well. You'll see this happen pretty much at every termination condition that's really good. The small triggers are outside the large, and then they get above the large, and then the next time the small triggers are physically located above the large triggers, it makes for a better bottom. Does everybody see down here at this yellow circle? The smalls are above the large, and that makes this a better bottom. So when you're looking at, this is the live market right here. So look, over here, the small triggers are below the large. Everybody agree? So that means, we'll probably go down one more time. And maybe from a fib, who knows? Crazy talk, right? Now, notice that the small triggers are above the large triggers. This is your pre-warning system that says this pivot stop out, because of the location of the small triggers relative to the large triggers, is going to be more powerful. Now, that lesson is in the material, but I don't think everybody gets it. Have you guys noticed? I mean, I'm sure if you've been here a long time, you've noticed it, but if you're newer, this is a very, very important where the small triggers relative to the large triggers lesson. You can anticipate support or resistance having a higher chance of holding based on this pattern. Yeah, I'm recording it. Alan. And again, look, it's in the material. I mean, this is from God knows when. I mean, we've taught this forever, but when you start seeing it in the real world, you're like, oh, okay. Now, if you're new and you're only looking for a 5-1 trend trade, how much time have you given that pattern in your brain in the last week? Realistically, 0. The thought never crossed your mind. And you know why? But you know why it doesn't cross your mind? Because you're so focused on that 5-1 chart and let me find a trend trade that you don't step back and read this. You're looking at the letters in between the words and you're not looking, settling back in on the whole story. Now, with that, we're going to go up for a while. How far are we going to go? Who knows? Right? So, again, look. Same pattern unfolding right now. We get to fibs, right? Resistance. But where are the triggers? Small versus large. They're above. Right? So we're going to go up. We're going to go up. And then what happens next? The small triggers get below the large. So that means that this high the second time, and I'm not saying it's going to be a high or can't break, but can you see it here? This is live. See where the small triggers are relative to the large triggers? Now we have a better chance of, or at least we have a more powerful termination area that says don't go long anymore until it breaks. Does that make sense? You can see it, right? It's really that easy. But until you spend enough time with your chart reading to say, oh, wait a minute, triggers are strong. We're going to probably keep bouncing up. Triggers get below. We might bounce again, of course. We're kind of stuck in between an area here. But we're losing momentum. So this is the kind of area that would make a good top if we break through and all the triggers get strong. Now, unless this chart looks right for a trade, you're not going to get one. Which it could happen. Unless you do counter trend trades at the edge to go short, which, can be done. But we're not going short now and we're not going long. Everybody agree with this? They made a decent top, but we've got a lot of junk to get through. Now we have to start planning ahead. Where are we going when we go down, guys? And again, we have to ask ourselves questions. Where are the fibs? So now we've defined we have a potential good top. It's not going to be a good top until we have odds favorable triggers getting below this 33 area, probably. Right now, they're just going to battle it out, and somebody's going to win eventually. If we do go down, where are we going? Let's just pick a spot. 38.20. So let's just say hypothetically we go down. I don't know if we will. I mean, we're not going to go short after support holds, right? Everybody agrees with that. We're waiting for the triggers to break below support. Or, look, I don't care. They can break above and go up here. I'm fine with that too. I don't really care. They have to do something different than what they're doing now. The chop is the best criminal. Yeah. Well, but, look, you can see chop coming usually, not always, but look, all indications are that support and resistance can both hold. Well, no, let's solve that. All right, well, that was quick. That was a little snappy, wasn't it? Now, under nice, under nice circumstances, that would have been a little bit slower, and we would have broken out, and we would have had a little pullback, and then we would have had a long trade, and everybody would have been happy. Obviously not the case. Yeah. And again, look, let's go back and see if we can get a hint from our 21-3 chart on which way they were going to go. So here's our 21-3 chart when we're thinking, are they going to be a top or bottom? Yeah. But look, let me ask you a question. If you were to use a 21-3 chart and what you do, here, I'm going to clean up my mess. Was there any reason to think you should be going short with this look? Now, you may not have gone long because of resistance, which is fine. But again, with this look, if you had this as a filter, there's no way on God's green earth you're going short. So a breakout to the upside is cool. It happened. And then all right. Now, let me catch back up. If you guys posted in other pictures, let me catch up because I don't want to get too far behind you guys here. So bear with me. All right, Ed, late getting order in here was going to take second touch of midband. But double divergence and they went. Did they go short? Ed, so I see this one that you posted. Did they end up going down anyway, even with a double divergence? Is that what it was that you were in reference to? So here's the question. Remember, we had one of these just a little while ago. 21.3 and the 13.2 said it was going to go, and that second divergence didn't really do anything. Same look going the other way, huh? You'll start getting these patterns. And again, sometimes you hold on because all the large charts say so, and then you end up getting your ass kicked, and you just have to end up losing. Geo. That's not good. Down 6,100. That's it. I guess you left a trade on last year. You see your trade that's on up here, Geo? Sorry, I didn't see this a little bit earlier to help you out, but you have to close your trade. I'm sure you figured it out by now, right? Looks like you left a sim trade on from God knows when. 6 points ago. Hopefully you have figured that out by now. All right. Edwin, pulled order hitting fibs. Possible termination. Okay. Here's the problem, Edwin. If you're not short up here, you miss the money. When you really get down close to the fibs, if you haven't made any money, you missed it for whatever reason. I see people who are very gun shy about getting in. I'm just going through the pictures, making sure I've got everybody's pictures done. All right. Ed, you're posting a picture that's not a trade and not yours. I'm not understanding why you're posting a picture that's not a trade and it's not yours. It's like, don't waste your time. I'm just catching up here. Ed S. I don't know if you took trades here. You were just drawing circles. Hard to say. All right, Edwin, let's take a look. All right, now. So you took, this was that S&P look we were talking about, Edwin, on the 21.3 chart that said it was going down for sure. You took it as a edge trade. All right, we're going to talk about that. And then Terrence, let me take a look at yours. You kind of did the same trade where you were trading from the edges on, it looks like an 8-2 chart. And then, so you basically did a 5-1 trend trade with an 8-2 chart. Everything's going your way. And, again, that's basically all you have to do is when everything's going your way, get in and hold on for dear life, right? I know that's not the exact trading plan, but that's about it. And then, same look. Everything is really strong. You paid a little extra with momentum and you got out. Okay? Terrence, I'm okay with those because I know you know what you're doing. All right, let me get that out of the way. All right, so there was something I was going to say. I forgot what it was. What do you guys have question-wise? Let's look at a 21.3 chart and see if we can get a sense of what's happening in the S&P right now, okay? So look, we had divergence and we had strong triggers up. Everybody okay with this? Divergence, strong triggers up. We made it through. Now, we have reached a fib on the 21.3 chart. I got you. Now, do the triggers and the fibs say the same thing at the same time? Because the fib says up, but the triggers say down. Everybody agree with that? So it's a really good look to lose a bunch of money because there's two opposing views on this chart. Yeah, and look, a 21.3 is slow. It's going to take a long time for things to materialize on a 21.3. So I think it's important that you still have your 13.2 chart. And we're basically waiting for something good to happen on a 13.2 chart. So again, I think we end up with just about the same look on the 13.2 chart. We have fibs. The triggers went up, but again, what do you see here that causes us? And again, look, this is where a lot of people have, they might even do a trade, a long trade. But this is another one of those pivot stop outs. And again, is a pivot stop out going to stop the market? That's the big question. Can we all agree with that? Sometimes they don't stop the market and sometimes they do. And there are times where you can trade into a pivot stop out, but you have to have a reason why. So look, I'm going to pull up the 21.3 chart at the time of a pivot stop out on the 13.2 chart. There you go. I'll put it in the chat room. So here's my question. Does the 21.3 chart give us any insight as to what the pivot stop out is going to do on the 13.2 chart? What do you guys think? Would you give more power to a 13.2 pivot stop out if you have this trigger on the 21.3 chart? Have you guys realized how little work we've done on a 5-1 chart today? Because you don't need a 5-1 chart unless you're going to put a trade on. So, for example, for me, right, let's say you were going to do a trend trade short. And again, look, this is how I use it. You don't necessarily have to do anything. But if you were going to do a trend trade short, I'm a fan of the 21.3 triggers helping me out with the trend trade. And I have found that, trend trades or trades that have the 21.3 triggers with them are pretty beneficial. So, for example, just to highlight a couple, what do you think? Trend trade with the 5-1 large up, the 8 range large up, which I made a brighter yellow just so you could differentiate, and 21.3 triggers up. And again, as you go back and you start looking at these, you'll start to say, wait a minute, I start to see, again, there are some where it's just a 5-1 trend trade, which is fine. But you'll start to see where these things come together. And again, it might be too much for you in the beginning. My number one thing that I want to stress to you guys today is the following. Stop looking at your 5-1 chart first, please. Just stop it. Don't look at the 5-1 chart first. It's going to confuse you, And if your large charts agree, then you can start doing trades. All right, so you guys give me your analysis right here. What do you see? How strong are the triggers? They're very, very strong. Everybody agree? But didn't we start out with one of these this morning? It almost looks identical, doesn't it? Strong triggers down, but we had fibs, pivot stop out, and a 1-to-1. Remember this one from this morning? That was worth $800 to the upside. Now, is this one going to be worth $800 to the upside? Not yet. Because how far would they have to go for the trigger lines to roll over? They would have to go a long way for these triggers to roll over. Everybody agree? Now, the one thing we can say is that we could put a box on there and say, look, if this area doesn't break, we're going to have to respect it. So when we go to our other charts, we can look at our other charts, our 13251. Do you guys want me to put my just 2 triggers on there, or are you guys okay with this? I'll get it closer to. All right. Give me your read of the strength of the triggers right now. Here, let me clean up my mess here. So we're going to go back to a normal 2 chart. Strength of the triggers. Very, very, very strong down. Agreed? How much work is it going to take for them to go up? It's going to take a lot. Now, we're at a spot on the 21-3 chart, but there's no trigger on any chart that says it's going to hold, which means it probably won't. Doesn't mean it can't. It's just the initial thought is it's not going to hold. So we'll see what happens. Probably going lower is the answer. Edwin, when you add a question mark, show me your trading plan, Edwin. All right, let's have some fun. You ready? How about this? I'll show you yours if you show me, I'll show you mine if you show me yours. So look, you ready? This is my trading plan. You ready? Here we go. Checklist. So my 5-1 trend trade checklist says, is the market coming from a good top or bottom on a 13-2 or 21-3? I want to go through every line in my trading plan and see if you guys understand it and have any questions. Yeah, here, look, I'll send it in a Word document so you guys can play with it if you want. There you go. All right. So I want you guys to answer the question. Is the market coming from a good top or bottom? Now, where am I going to get that information, guys? Where do I get that education? In the self-training section and in the user guide and everything else, but trading the edges, tops and bottoms is going to be the video that you have to really, really, really spend a lot of time with in order to understand that rule. Is it a good top or a good bottom? Because I assume when you write a rule out like this, that you know what that means, right? And that you have experience with it and you know what it means. Now, does everybody understand odds favorable triggers? I know if you guys have spent more than a couple days with Mark, you know, right? Very wide screaming trigger lines on either the 13.2 or the 21.3. This is my plan. If you guys have questions, just interject. Just type them out. Okay? I can multitask. Do I have odds favorable triggers on the 8 range? What? Another chart to look at? So what are odds favorable triggers on an 8 range chart? I want you to answer the question. Isn't this odds favorable triggers on an 8 range chart? Strong triggers. Smalls outside the large. Everybody okay with that? So to do a trend trade, you need to have a good top or bottom, strong triggers on all of your charts, no termination conditions on the 13.2 chart. Yeah, or even a 21.3 chart, but right? So I guess I could add 21.3 on here because if I hit a pivot stop out or a 1-to-1s on a 21.3 chart, I very, very, very much respect that. So I guess I could add 21.3 here too, but I know to watch it. Now, for a trend trade entry, you guys already know this stuff, right? What fib support or mid band or 1-to-1s or whatever is in between the large triggers on the 5-1 chart? I'm not sure I understand that 100%. You're saying, well, look, before this is where the odds favorable triggers were. I drew the arrows. So you have to answer the question, is that also odds favorable triggers enough to do a trend trade on a 5-1 chart, Edwin? So, you know, realistically, you're looking at right here. It can't be. So you're saying it can't be a trend trade over here. I'm just trying to figure out what you're saying. Right? So here's the spot right there. So watch, I'll take a collective of all 3 charts and then you guys will go through the checklist if you want. That's always a good way to do it. Okay, so here's all 3 charts. You ready, Edwin? And this is what I want you guys to do too. Look, take a checklist. Here, let me make it smaller just so it's not as big as my whole screen. If you don't have Snagit, get Snagit. It'll make your life a lot easier. I like to blow things up really big so you guys can see them really well. Tell me if I'm off base here, but and again, if you don't take one, it's okay. It's not going to kill you. But all right, so checklist: is the market coming from a good top or bottom? Well, we're having a breakout, so that's also counts as a good look. So let's start with the next rule. Are odds favorable triggers on the 13.2 chart? So we're comparing this trigger to this trigger. What do you guys say? Yes or no? Are the odds favorable for more down with those trigger lines? You guys tell me. I already know the answer, so what do you guys see? Is it strong enough to the downside? I say yes. So now the next one is in my checklist, do I have odds favorable triggers on my 8-range chart? Well, if I look at my 8-range chart and I look at the small trigger relative to the large trigger, angle, direction, location, to me, that looks like favorable trigger lines in the right direction. What do you guys think? Yes? 100%? Now, the only little thing which is not quite perfect is, do we have an area for entry inside of favorable large triggers on the 5-1? All right. So here's where and again, this is where maybe the sticky spot happens for a lot of people. You're trying to get short at the mid band, and the market only goes to 40 instead of 40.50 or 40.75, and you miss it by a couple ticks, right? I mean, is that a fair assumption? So again, would you have missed it? Maybe, and that's okay. But I think as far as, when you lay it all out with a checklist and you go through it really slowly, everything said we were probably going to go down a little bit further. All right. Ed, this is a chart for us to go through. We'll go through that in a minute. Gary. I don't know what this is. I don't see any trades on here, Gary. So, termination, waiting for a trend trade. Okay. Claire, I use Snagit. And here, let me go to they have a free trial of it, but this is really, 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 really beneficial. Snagit's the exact same company as the free one that we gave you. But what it does is it allows you to take a picture. And here. So look, I have different pictures. So I can take a picture of a chart and then I can copy paste another picture. So I can take my checklist, like this one, I can copy it and I could go to a different picture and I could paste it on there. And then that way I can actually have all of my trades and all of my pictures, and I can go through and say, does my checklist pan out? I think it's like $60. I don't know. I think it was 50 something and they raised their prices like everybody else did. So, but it's a really cool thing. And then to share it, you just go share and screencast just like you would with the other one. And then you can paste in a picture. And then you'll get the picture the exact same way that the other one comes through. But for me personally, and I don't know about you guys, but Snagit is an invaluable tool. Here, let's get back to where we were here. All right, so we're in a live market situation right now. All right, can we start with a 21-3 chart just for grins and giggles? what's your thought about this chart alone? Quite a bit of momentum to the downside. What would you guys say? Now, where are we going? Pick a number. 38.20. I don't know if we'll make it there or not. We'll see. But anyway, that's the first number that pops into my head at a fib. And again, you'll see this a lot of times with the fibs where they don't quite make it to a fib and then they go up, and after they roll over, they end up making it the second time. We call it finishing the business. They didn't finish it the first time, so they usually go up, and they, would have been nicer if they would have started from here. But I think when we look at it in the big picture sense, the only thing we could think is that resistances are probably going to hold, and we're probably going to be leaning to the downside. Can I take a poll real quick? How many people just said, I'm going to slow down my 5-1 chart work and start looking at larger charts? Just curious. How many of you guys have said that today? It's going to take you 3 months to get it right. Man, that sucks. Whenever you start doing something new, it's going to take 3 months. You've been using 21.3 for a while? Yeah. And you've been winning for a while, haven't you, Gary? It keeps you on the right side of things and keeps you kind of focused on the big picture. All right. So here's the big question that we have, and you guys have to answer this one. Can you go short right here, right there? Everybody see it? Can you go short right here? If you're staring at the 5-1 chart, the answer is yes. If you're staring at this chart, what do you see? $21.3, $34.5. All right. Yeah, it's a termination condition. Now, here's the nice thing about a termination condition. And again, not a lot of everybody thinks about this. A termination condition on a 13.2 I want you guys to take a picture of this and print it out and put it on your desktop. A 13.2 termination means no more 5-1 trend trades. That's all it means. Because when you look at this, it doesn't look very termination-y, does it? So all a 13.2 termination means is don't do a 5-1 trend trade, but look a little higher. Does that make sense? So, and again, I'm not saying that we won't stop right here. There's a good chance we will. But instead of getting short right here, maybe you're looking a little bit higher before you go short, or at least bigger stop. And again, this is where, again, the work of putting together 3 charts takes a little bit more effort. Right? So look, we have the 21.3 chart smoking to the downside. We have 1-to-1s in mid band, or 1-to-1s in fibs on our 13-2 chart. So again, look, the only thing this said is don't get in right here, but we're still going down. Now, how far will it go? Who knows? We might have to manage. So watch, I'll put this in the room here so you guys can see it. What do you guys think? I think all three of these charts line up quite well for a short from somewhere around the resistance. And if you got in a little early at the mid-band, it's not going to kill you probably, but it's going to make it harder to manage. Now, for me personally, one of the things that I look at when I look at, you know, because you have to ask yourself if a higher so before we even look at the live market again, you have to ask yourself if a higher divergence is going to take you out of your trade. Now, one of the things that you'll see, I made a video, again, a higher divergence is going to mean that this pivot stop out is going to have a little bit more power. So before we go too much further, you can read even more on your chart before we even go watch the live market. So look, we have to respect the fact we have a pivot stop out. Is everybody okay with this? You still have to respect it. And then you can still go short, but then you have to respect rules. And the rules say if your small triggers are up and get inside your large triggers, a higher divergence will probably take you up to 39, right? And take you up to a higher level. This is where the 21.3 is going to screw you up in the beginning, because you're going to say, well, the 21.3 says we're going to go forever. So I'll hang in there forever. Do you see what I'm saying? And if you were only at 13.251, even if you took it, you would manage it very diligently because of the pivot stop out. What makes a higher divergence? What makes divergence, or what makes the pivot higher than the last pivot? I mean, a higher divergence is just a pivot that's higher than the last pivot. Higher high, lower low, lower high, lower low. But where it has, you know, again, look, there's a YouTube that I did, which you guys can go find. I think it was August 25th or August 28th. But we did a lot of work with divergence. And look, if there's no divergence on a 5-1 chart, you're going to get one more short trade, even into a pivot stop out most of the time. The divergence on the 5-1 chart makes or adds power to the pivot stop out on the 13.2 chart. So no divergence, it usually goes one more time. If you have divergence, it might cause a full termination. Does that make sense? So if there's nothing on the small chart that says we're going to stop, the pivot stop out will probably break. If there's something on the small chart like divergence or higher pivot divergence or double divergence or pivot stop out divergence, or something goes wrong on the small chart, the pivot stop out has a lot more reasons to go higher. Yes, divergence has the percentage. So when you see the negative percent, you know there's divergence potential. So with divergence potential, if you were short, your stop would be 2 ticks above this line. right? That's the whole. Here, I'll put this one in here one more time. So again, this is a big kind of, going through a lot of stuff here. But again, look, we had strong 21-3 chart, which is cool. We had a pivot stop out on the 13-2 chart, which is a termination, but we have to read it. There was no divergence on the low to go along with the strong 21-3, so it was worth taking another shot just in case it goes. But then, because of the pivot stop out and higher divergence here, which would happen, at 38.35, a couple ticks above that reversal bar marker, that would be the end of the trade. So if you did it all perfectly, you sold close to the fib and then you got out after higher divergence and you didn't lose any money. Now, are you guys good like that with your management? Are you able to put all of those scenarios together back and forth? No, of course you're not, because you're new. That's why I tell you it's going to take you months to say, if this is happening and that happens, I have to do this. If this happens and that happens, I have to do that. And then you have to see it enough times that you actually believe it. And then you have to do it enough times you don't screw it up. So the people that make trading look very easy and make a ton of money have done it for quite some time. Now, I'm not trying to scare anybody. I'm just trying to tell you where you're going to be as time progresses. I didn't scare you guys, did I? Once you read it correctly, you're going to know everything to do, and it's going to become second nature to you. All right. So, Tim, look. Higher divergence. And again, this is enough, this divergence right here is enough to make this pivot stop out work. So again, look, when you look at it in a... Here, I'll get rid of my synthetic trigger for a second. Dang nabbit. Hang on. So again, do you understand this? Look, when you go back and look at it, you're like, oh, pivot stop out. I shouldn't have gone short. Right? I mean, that's the 13.251 easy version. Pivot stop out, don't go short. Everybody cool with that? Now, could you have gone short? Yes. Did you have to manage it differently because of the pivot stop out? Yes. So the rule is really simple. And look, we'll go back to my plan real quick because I think it's cool just to kind of see it in a plan. Look, my plan says, just for grins and giggles, on 50-50 trades, if there's something that is good and something that's bad for a trade, or the triggers are 50-50, or what does it say? It says, if there's no divergence on the 5-1 chart, assumed, and 21-3 triggers are strong, then get in at the area. Or you can wait for a market flow signal, but... So this was a good case of this rule in my plan live as it unfolded. So, and again, just for fun, I'm going to say this is a bigger picture just to blow it up. And look, guys, if I wear you out, let me know. But, oops, that's not it. Where'd that picture go? And again, I like to do it with the plan so that way you guys can see it. So in the plan, it says if you have strong 21-3 triggers. So we did, I think, right? The plan says if there's no divergence on the 5-1 chart, So we'll go back and look at it. Right? On the 5-1 chart low, there was no divergence. Everybody agree? There's no negative number down there. So get in at the spot. Well, what's the spot? The mid band or the fib? Or somewhere in between. Now let's go back to the rules one more time. And again, I have management down here. It says on 50-50 trades, manage tight. Let's see if you guys can see that. Can you guys see that okay? On 50-50 trades, manage tight, take half an exit at prior highs or lows, manage to break even plus, exit trade with higher or lower divergences. So again, there's a lot of management stuff, but that's all in the management rules. So again, I think this one worked out fine for strong triggers, 50-50 with a pivot stop out. Oops. No divergence. Take the short. If you get a higher divergence, get the hell out. And then see what happens, right? I mean, then it goes up higher and then it goes back down again anyway. So we'll go look. So again, that's a lot just to get through a trend trade, isn't it? At a high level, when it's, you know, when it's perfect, and it's just knucklehead bulletproof and it's the one, you know, those are easy, right? These are the ones that you're going to talk yourself into and you're not going to manage properly because you don't have enough experience to do it yet. And that's okay. This is the importance of posting pictures in the chat room. Okay, so let's start with our 21-3 chart again. Can I define it? Sure, I can define it. So here, I'll use in the user guide, in the termination sections, okay, a pivot stop out is really defined as, here, I'll give you the visual. You see this pivot down here, this low right here with the negative 150 on it? That's a pivot, a low. This is price trading below this pivot and then reversing. That's a pivot stop out. Double bottom, but it goes a little bit further. They're just running stops. Now, pivot stop outs are great for entries as well as exits, by the way. I just want you to know that. Right? There are some counter trend traders. I mean, to be a pivot stop out, yes, price must go below that line and then back above it. Technically. Sometimes they hit exactly on the line and have a double bottom, but almost always they stop it out. Let me show you a couple of charts that I posted in the advanced chart reading section. Just for grins and giggles, okay? Look. And again, this is how I use some of the 21-3 triggers. Here, let me get Discord out of the way. Bear with me here. I got a lot of stuff going on here. Let me clean up my mess. Yeah, I got 22 things open here. Bear with me. All right, Discord. All right, so for me, and again, look, this is me, but this is a pivot stop out. Can you see this? And this is one of the ways I've been using those 21-3 triggers that I superimpose. It's still a pivot stop out at Fibonacci resistance, which is a termination condition for us. But, you know, I've been studying this a lot. This is a newer termination condition that I'm coming up with. Whenever you have a pivot stop out at sideways 21-3 large triggers superimposed on a smaller chart, it has a tendency to go the other way, which some would say could be a counter trend trade. And again, I have a bunch of these in the advanced chart reading section. You know, again, look, this one is not quite a pivot stop out. It's an equal high as the pink line, so it didn't technically stop it out by one tick, but close enough for government work. Here's another one that happened yesterday. Another example of a pivot stop out of a divergence high. See that? At the 21-3 triggers, which just so happen to terminate the trend or the retracement. So again, these, you know, when you say, where is this trading plan? Alex, have you not written it? You have to write it. It's yours, buddy. I've written mine. But I always work on mine and continue to work on mine as time progresses. It's your plan. I don't go to work for you. I don't cook your food, and I don't write your trading plan for you. I got you a good start, but that's about all I can do. You want to see a 50-50 with divergence? A trade or the rules? I'll put my rules in here. Here, I'll post them again just so you don't have to scroll up. But there's mine. Just for grins and giggles, Alex. Let me look. I'll give you the video that I did. I think September 26th. Save this video off right here. Probably one of my better lessons in when divergence helps and hurts that I've ever done. So watch that one. And then I did another one on like August 25th where I did a lot of trigger line reading. So if you want some more in-depth stuff, those two will really, really help solidify some of those thought processes in reading your triggers and divergences. All right, so I still have 38.20 down here. What do you guys think about the 21-3 chart? Is there any reason to think we were going up still? I know we went up a little bit higher, but is there any reason to think anything but downside at the moment? Losing a little momentum now, but so nobody got tricked into going long, hopefully. Is everybody okay with this green box being resistance and all of the triggers are down and below it? I just want to make sure everybody's okay with that first before we go forward. Doesn't that just feel easier, guys? You know, there's an 87% chance we may get to 38.20. Once they don't make it, get close, and then roll back over again, I think it's like 87% chance. Anyway, all right. So let's look at our smaller charts and see if we can figure out what the hell's going on. So there was the top on the 21-3 chart, and we missed our 5-1 trend trade. I mean, but it's still there, but we weren't watching it live. But you can see it, right? Without even needing a 5-1 chart. You don't need a 5-1 chart to see that, do you? Somebody tell me. So we had a good top on both a 1-to-1 termination on the 13.2, the 21.3 set down. We have strong triggers down, super favorable momentum. I know you guys are short. Where did you guys go short? Give me a price. All right, let's look at where the rules say. You were looking at crude. You know, look, I'm going to say something, and, you know, you can take it for what it's worth, but I find that when I watch both markets, I miss the winners and catch the losers for some reason. And when I focus on one market, I do a hell of a lot better. That's just me. All right, so let's checklist the trade here and just see what we came up with. Okay, and, you know, I'm going to go on the assumption that the 8 range chart looked pretty good there too. When these three do, they always do, but we'll do it. We'll bring an 8 range in here at the same time. Okay, so look, here's the cool thing about Snagit. You can go back to your trend trade rules, copy, paste them right back in. So they're a little bit fuzzy since I blew them up, but so let's ask ourselves the question. Is the market coming from a good top or good bottom on the 13.2, 21.3? The 13.2 had a 1-to-1, and then the 21.3 is smoking to the downside. So I'm going to call that very good top for now. JP, you went short at 36.75? Yeah, I know where your short was. All right. I'll get to that one. So again, look, I have to say very good top because we had everything perfect on the 21.3 and we had 1-to-1s on the 13.2. Now, odds favorable momentum in our triggers. Look, I don't even have to really point that out, but you can see obviously that's the case, right? So I'll just write it out. Odds favorable, strong trigs. And then finally, you know, there's no termination, so we're going to enter, you know, large triggers, mid-band area. Everybody okay with this? I'll blow it up so you guys can see it a little bit easier. And again, I'm trying to help you guys use the 21.3 chart a little bit. So look, let's start here. Everybody okay with the words on that? Very good top. It's a lot of resistance and a lot of down triggers. That's all you need to know. Now, on the 13.2 chart, remember the little yellow 1-to-1s? Those are our termination spots. So that's also a good top. Hey, Claire, do you have children? Are they old enough to drive? All right. So, I don't know if you remember, um, when you drive on the freeway and you're merging onto a 75-mile-an-hour freeway, you're able to drive your car, get up to speed, look over your shoulder, analyze all the gaps in between the cars, see if there's an 18-wheeler coming, see if there's an idiot driving too fast, see if there's a knucklehead driving too slow. Where's the gap I'm going to slip my car into so I can get in without dying on the freeway? Right? You can do that. Now, when you put a 15-year-old with a learner's permit in a car and say, go get on the freeway the first time, that's where you're at with your day trading. So it can be done, and it will be done, and you'll be able to do it very easily. But when you say you're having a hard time wrapping your head around 3 charts, it's just because you're new and you don't have enough experience yet, and that's okay. You know, I hate to tell you this, but to really get it all down perfectly, it's going to take you a year to 2 years. Not saying that you can't get regular old trend trades down in 3 to 6 months and make money, because that's about the time frame. But, and you may decide, look, it's not worth it to me to add a 21-3 chart or add an extra chart and just, not everybody is the same. Not everybody has to have 3 or 4 charts and edge trades and momentum trades and large chart trades and small chart trades. You have to go back to, what is it that I want out of my trading? So if you go short here and you make $100 and $200 and you're done and you're happy and you do it 2 or 3 times a day with 10 contracts, you can be super happy with it. So, again, everybody's going to be a little bit different. All right. So let's make an assessment of our charts in a live environment right now. Obviously, we had trend trade, and look, eventually trend trades come to an end. Again, this is another divergence situation where, trend trades can come to an end with multiple divergences, which you guys have seen. And again, should you hold on for dear life if you're up $200 or $300 or not? The downside is if you get out with a divergence here and it goes down, you're not going to get the rest of your money. If it goes up to the fib here and here and goes down, you can always take another trade. So, do you get in and then get out and then get back in again? Or you get in and get out and never touch it again? Those are the choices that you have to make. And you have to, until you've actually decided who you are and what you want to do and what your plan is, you may say, I don't need that second or third trade. Just the first trade is the only one I need to make the money I need to make. Does that make sense? You don't need all the money, you just need some of the money. So you guys have to kind of get through, that thought process in your head. Now, I want to go back to my plan one more time if you guys don't mind. Just because I think it's fun to go through my plan and just... Again, Janesh had said something that I want you guys to understand. He did a trade where he made 8 and 10 points, or 10 and whatever the hell he made. He made a lot of money. Let me see what his exact post is. He went short at 38, 36, 75 for 10 and 14 points. So how the hell did he do it? And again, look, I've got that trade in my plan, and I want you to see it. but it's a different style of trade. Okay, and again, some of you guys have gone through the HVA trade. But a momentum style trade. And again, look, I just put examples in here. Maybe it's even easier. But I want you to see the way this works. This is a different trade that's outside of the normal plan. And I'm not showing you this to confuse you or anything else. But the trade itself happens because of the quality of the top. And if you guys read through my plan, you'll see that it says the quality of the top is paramount. So again, when I say the quality of the top, what am I talking about? I'm talking about something that is perfect from the edge that makes the market go the other way. Some type of super termination condition you can hang your hat on. Everybody okay with that? That's rule number one in that plan. So you must have fibs with no triggers past it. It has to be a really good top. Now the second part of mine is if you have a really good top, and you know, this is the one that, you know, again, it's not the normal trade, because if you're waiting for the large triggers, you're never going to get them. Not always, never, but if you have a super quality top and you have a high momentum move, sometimes you have to sell the first area or else you don't get any money. And look, you'll get a trend trade eventually, but you miss the bulk. Does that make sense? Here, I'll show you a second version of this picture. And again, it's a quality of an area that is really, 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 really good, and then super strong small triggers, and then you take a first quick pullback and get more money out of it. It's like a momentum style trade with just a small pullback. Everybody give me a yes or no. You okay with that? I'll give you another one. So it's just a different way of doing the same thing. You know, and again, sometimes you get a momentum move through and you don't get a deep pullback. You know, this is the one that I think made Ed mad a little bit earlier when he said it can't be a trade. You know, because it doesn't quite pull back all the way, but it does pull back and then it goes anyway. And again, these 21-3 triggers do help me with that just a smidge. Again, this was the trade we were talking about where I think it made, somebody said it couldn't possibly be a trade, but anyway, during a strong move, it could be a trade. Anyway, that was the same one that's in my plan, so it's, anyway, looks familiar. But what Janesh did, and again, look, let me show you what he did. Remember we had talked about first, and I want to draw this box. Remember we talked about this being a really, 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 really good spot on the 13.2 and the 21.3. Super prerequisite for that trade. It has to be, I know it's going down for sure, just about, right? So the momentum trade happens after a good top like that on the 5-1 chart. So what, and again, look, this is exactly where he did it and why he did it. And he did it at 36.75. And you'll see it and you're going to be like, holy shit, I see it. So again, going on we had a really good top on all of our big charts. Everybody still okay with that? You can't lose sight of this box or else you don't get that type of trade. So really good, it's going down on all the charts, 13.2 and 21.3. And what he did is he sold right here at the small triggers in mid-band. That makes no sense to you, does it? Now, when you add the quality of the top, it makes sense. If you were just looking at your 5-1 chart, you're thinking, I'm going to do a trend trade long. Right? You see how that messes with you? If you're looking at your large charts first, the short makes a lot more sense, doesn't it? So it's the first resistance with small trigger strong after a good top. Anyway, that's the rule that's in my plan as a second trade. You know, and then the other one obviously is an HVA trade, which you guys have that anyway, right? Make a good bottom, triggers roll, use the HVA line. It's almost, you know, the momentum style trade is kind of the same thing as the HVA trade. Has to be a good bottom, has to have small triggers rolling, and then you get your first chance to go the other way. So what have we gone through today? First things first, stop staring at your little chart first. Stare at the big chart. All right. Somebody give me the read of the 13-2 chart. What's one thing that we can say with a pretty high degree of certainty? Resistance held, yes? Can we all agree to that? All right. Now, there's no trend trade because all the triggers aren't right yet, right? Everybody agree? If you're waiting for a 5-1 trend trade, you're just sitting there because it's not happening. Now, what if Janesh was to do the same trade he did last time? Where would he be short? Give me a price. Just assuming he did the same trade he did last time. See who's paying attention. How about magenta midband? That's a better way of saying it. Here, watch this. You ready, Clara? Here, I'm just altering things. That's what Janesh sees. He sees a good top, and then he sees this. And he's probably short at 33 even. 33.50? Okay. I was going to say 33 even, but 33.50 works. So again, really good top on all the charts, and then he's taking a first chance. Now look, this is one of those pivot stop outs. We have to get through that in order for it to keep going. Now we already said where it's going, so it's going down to 33.20, right? Eventually. Nothing has changed at the moment. Got a little bit to get through here, and then 33.20 is where we're headed. You guys like this big chart? Pretty cool, right? And again, I'm not saying you have to use it, but for areas and overall direction and targets, works out pretty well. All right, I'll put all my pieces back on here for a second. See, now look, after all those trades, now you guys are waiting for a trend trade. I hope it comes. And again, this is why the benefit as you start to grow with our software is the ability to recognize the good tops and good bottoms, and to say, because of a good top on the 13.2 chart and because of the overwhelming strength on the 21.3 chart, I can take a slightly more assertive short and get a little bit of that extra money. And again, if you're not ready for that yet, it's okay. I'm trying to give you guys a picture of where you're going to be, not where you're at right now. Put all my parts back together. All right, questions. And again, look, hopefully I haven't discouraged anybody. Hopefully I have, just given you guys some food for thought. My number one, hopefully, takeaway from this morning is stop staring at your little chart so much unless you're at a good condition or a good top or bottom. You don't need to stare at that little chart all day long. It's fun to watch and fun to keep you busy, but it's only for entry and exit timing. All right, Ed, let's see what you got. Now, for anybody who's brand new, all right, Ed, so you have a 34.5 chart. All right. So you basically had a pivot stop out on a 34.5 chart at the top. Strong triggers going down. Mid bands and fibs with strong triggers going down, so it should go down, and you found short trades and you made a bunch of money. Is that about right? Termination, strong triggers. Probably could have been selling 63. You waited for it to roll on the 13.2 as well. Sold the crap out of it, made a bunch of money. Probably should have held on for a little more, but maybe you have preset targets or something. All right. Now, after all of that, guess what's going to happen? Look at all that money that could be made, guys. From knowing the edges and knowing the large charts and all that. Now you're finally going, okay, baby, give me a trend trade. Aren't you? I watched the whole thing go down, and look, the last trend trade is always usually it's still a good one. But now you're waiting for that last one to come up here and get you and then be a trend trade, right? I really like this one even more so than the first one Janesh did. You guys see why I say that? Resistance, triggers below it. That's a good momentum because the triggers are down. That's a good area. They're not even going to be nice enough to come back all the way, are they? That's your trend trade entry window right there, guys. Not sure if it's going to happen or not, but that's the window. Does everybody understand trend trade rules? I know we haven't gone through them, but I'm assuming you guys know them at this point, unless you're on day 2 or 3 or 4, which we can go through them real quick. But hey, look, a good top, strong triggers, pull back into the mid bands, fibs, and large triggers, and that's and again, look, sometimes trend trades lose. Here, watch. I'll sell one for you. Everybody okay with this? I can't say if it's going to win or not, but that's the rules, Matt. Now, when are we going to reduce our risk, guys, on a trend trade? When we get down bars. First profit target? Yeah. You know, it may lose. It may not. I don't know what's going to happen. But these are what I want you guys to do. And I want you, look, let's take a picture. And we'll go through and we'll do our checklist. I won't even worry about managing it right now. So we'll copy, paste the checklist on there. So, is the market coming from a good top or bottom? That's awful. Here, let's use that one. Yes. Do we have odds favorable triggers on our larger charts? Yes. The 8 range triggers are strong, I'll just tell you. No termination conditions. Did we get in at an area inside of the large triggers? Yes. So, look, I just posted it in the chat room. So you guys can, and again, I mean, obviously I'm a little bit quicker at it than you guys are, but this is what I want from you guys every day. Do this 500 times, and you're going to have a great time with Nexgen software. Is everybody cool with this? This is your job. Strong triggers, trend trade, post a picture. And look, if it loses, it loses. Let's see. I'm going to watch it. Well, shit. I forgot to move my stop. All right. I'm going to just have to leave it alone, but. I almost hope it loses so you guys can see a loser, and it's okay to take a loser. Did anybody get in and get stopped out with the stop behind a pivot? If you did, you did the right thing. It's okay. You might have lost 3 or 4 ticks. Does everybody understand stop logic? And again, I'm not going to mess with it. But look, if you get in and you get a pivot, you can put your stop above the pivot. So you would have been in at 27 and you would have lost 3 or 4 ticks. You guys can recover from losing 3 or 4 ticks, right? Because here's the other nice thing about it. Let's just say hypothetically, and again, there was a market flow signal, which is also another really good way to, let me clean up. Usually you're going to put your stop 2 ticks behind a pivot and or a market flow signal. So look, I'm going to move this over just a little bit just so you guys can see. This is where we went short right here. Everybody see that? When you get a market flow signal, you put your stop 2 ticks above it, and then they can bump you out. It's okay. Now here's the nice thing. You can always go short again. Let's just say hypothetically you get another signal. And you say, hey, they ran me out. I'm going to go short again. You can always go short a second time. So if you lose a tick or 2, and again, I'm not saying go short. I'm just saying hypothetically you could go short again if you wanted to, if you get back to a good reason. So I want you to look at this and tell me, do we have a good reason to go short here? What do you think? Is that a good short? No, it's not per the rules. All right. Questions, comments, concerns. You know, I haven't even looked at crude oil today. Let's see what we got in crude oil. Let's start with the 21-3 chart. Is that okay with you guys? Just for grins and giggles to keep it big and easy. All right, so 1-to-1s and fibs, and then eventually the triggers rolled up. And then divergence just past the fibs, and then the triggers rolled down. What do you guys think? Can you make a living on that? I bet you could. All right, so we have divergence at fibs, and then the triggers roll up, and we hit fibs, and then we go down and hit fibs again, and then the triggers roll up, and eventually we break through the fibs. So again, look, circles are where there's probable trades, where you probably could have had some kind of long trade. So maybe a long trade, maybe a short trade. As we go forward from support, and again, look, when we talk about good tops and good bottoms, right? Divergence from support, a second higher divergence. Somebody had asked that question about a second higher divergence. That's a really good look for the market to go up and break through fibs. And this is the last, looks like hour or so. As we broke through the fibs, again, those are the looks that we really love to see, right? Those, and then tails along the way. What do you guys think? 21-3 chart, keeping it pretty smooth on crude oil. And again, we barely missed a spot. You could almost call that close enough for government work, but this is where the mid band, and they'll kind of mess around a bit. We'll see if they finish that move off to the upside or not. Yeah. Well, this is where you would anticipate if they get into this window, they could make a potentially good top. Because they've already shown that they'll sell from here. So the chances of them selling from over here are pretty good. All right, now let's take a look at our 13-2 chart. So 13-2 chart had divergence. And again, look, this is as you work your way down through the time scales. Do you see anywhere in here where 5-1 trend trades could have been true? That's your look, isn't it? Strong triggers out of fib. That's really the only one you need. Make it down to an area. Are the triggers past the area yet to feel comfortable enough going long? What do you guys think? I would say not yet. So they're going to mess around in here for a little bit, and then they'll probably go finish the move off to the upside. We'll see. Or if they break 85, then they'll go back down to support, but one of the two. Having not reached the big fibs up top, my guess is that crude oil would end up going up. Does anybody have questions, comments, concerns? Do you guys have trades that... Let me go through and we'll look for some trades and see if anything you guys posted. Joel. All right. This is perfectly done, Joel. Trend trade short. Stopped out behind the pivot. Lost a couple ticks. No big deal. Nice job, Joel. All right, Joel. This is a picture of us. Okay. And we got yours. Ed, this is your other one. Let's take a look. So NASDAQ 13.2. Late entry cost me the first time. Second time you got it. All right. So again, this goes back to Ed S. Do you see what he's doing, guys? He's using the 21-3 chart to lead the way for his smaller chart trading. That sure is a nice termination condition over there at the bottom. Textbook. Perfect. Does anybody else have trades that you guys need to put in? Want some feedback on? All right. Ed again. NASDAQ. Everything's going up. You're kind of buying on the way up, not the way down. It's a little different way of doing it. All right, guys. So here was your 5-1 trade down. And then we got down to support. And kind of need to break through here, but we're definitely leaning to the upside, aren't we? On crude oil. All right, guys. It's your room. What do you guys want? Questions, comments, concerns, things you guys want to go through? I know we haven't really taken much of a break today, so we'll probably end it just a little bit early, but Anything you guys want to go through? Any questions you have? Anything that you're saying, I wish you'd say this again? I wish you'd tell me where that information was? Nothing, huh? All right, I'm going to go mic silence for a few minutes. I'll be right back. All right. Can you guys hear me? Just making sure. Um, mm, mm, mm. Another subject I wanted to talk about real quick with you guys because I think a lot of you guys may have questions about this. On the education page, look, there's a process that you guys are going to go through. This is an old picture. When they first came out with micro contracts, it was a really cool thing. Anyway, you guys, when you're brand new, you're going to start off writing out your plan, writing out your checklist, writing out your rules, using all of our stuff, right? You're going to document your trades in pictures and you're going to post them in the class and you're going to get feedback on your trades, what you do right, what you do wrong. And look, I want you guys to think about something for a second. What expertise do you have in analyzing trades to know if you've done it perfectly or not when you're new? You don't have any, and that's why you're here. So, again, one of the most valuable resources that you guys have at your disposal is us going through your charts, telling you what you could have done better, worse, what you did right, what you did wrong. It's literally one of the most valuable resources that you're going to have. You have to trade on simulator until you prove you're 100% consistent. There was a point in time when I actually made this picture long ago that there was no such thing as trading capital and things of that nature. Now, there's firms out there that'll put up trading capital for you. And I don't know if you guys have been through this or not. But I think it's one of those things that you should really, 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 really consider. And the reason why I say that, and again, you can go to our education page and we have these on here. I think Apex is probably one of the better ones, except you have to use Ninja 8, which is kind of a pain in the ass, but we're working on that. But what they'll do is, and again, look, you can't skip the process. You still have to sim, you still have to post pictures, you still have to write your rules, you still have to do it right, you still have to prove you can have money. But once you've done that, and let's just say hypothetically you go to somewhere like Apex, okay? And, they'll give you the money. So you don't even have to have your own trading capital at this point anymore. And what that means is that if you trade well and you hit your goals and you do it consistently without blowing out, they're going to give you money. So I want you to think about this for a second. You have two choices. You start trading your hard-earned capital and put up 10 or 20 grand, and maybe you lose it, maybe you don't. Or you put up a couple $100, $200 or $300 or $167, and they give you $50,000 worth of trading capital. So let's just say 100,000, okay, round number. You spend $200 a month for 100 grand. It's the equivalent, since you keep 90% of your profit, it's the equivalent of you trading your own $90,000 account. So if you're unwilling to put up $90,000 of your own money, essentially you can do that for a couple $100. And again, it's one of those things that, they've advanced a lot over the years. Top Step kind of started out, and anyway, when you're ready to trade and you think you're going to be a winner, this is the way to go, in my opinion, because if you can't beat this and make money, then you're not going to do it with your own cash. There's no reason to lose your own. Remember how I typed in 7405 as one of those spots? Pivot stop out at the 21.3 trigger. A lot of times that makes the market go back up. Just another case of it right there. Now, will it get through 31 and get up to here? We'll see about that. But anyway, this is one of the ways that I use these 21.3 triggers on my chart because, again, look, you'll see it's the same trigger as here. The triggers are up and the market may bounce off of them. I mean, that's basically it. That's not a far stretch, is it? Small triggers are up and we might bounce up from them. And so again, this is why I superimposed them on my 5-1 chart, just to give me a little bit of perspective on where the 21.3 triggers are. And I also look at where the other large triggers are relative to the 21.3 triggers. Traditionally, watch and you'll see, this is actually pretty easy. when they're all trending together, it's really, really, really easy. But what will happen is you'll start to see, this happens at tops and bottoms. Yeah, I got a lot of circles on here. But you'll see this happen at tops and bottoms a lot where, and again, today's kind of an exception, but these triggers will start to contain, and again, you can go through the advanced section in the room. I've put a lot of examples of this in there, the advanced chart reading. But all of these examples that I put in here are using the 21-3 triggers. And you'll see, you'll see either pivot stop outs or lower divergences or large triggers starting to roll at or below them, and the market does a really good job of turning around. When the large triggers don't roll below them, the market usually keeps going. But anyway, you guys may want to go study a couple of those and just have some fun with that. But there's a couple patterns that, again, I've seen, and this is how new things come to be. I didn't call 7405 lightly. It was a pivot stop out at the large triggers, and it's done a really good job of making the market go back up. And, those are the types of areas where the more assertive traders might find an extra trade or two. And then, again, because the triggers are up, we might still hold 16 and keep going up. We'll see what happens here. But anyway, food for thought. There's a lot of ways to skin the cat, guys. All right. I'm about done unless you guys need something, want something, unless you have something to go through. Are you guys all building 21-3 charts today? I would almost prefer you had a 21-3 chart than an 8 range chart first. You guys are very quiet today. All right. I will be done. I will see everybody tomorrow. We'll do it again. We'll have a more conservative, easy, slow, simple class tomorrow. Yeah, hopefully I didn't give you guys too much to chew on today. So we'll have an easy, slow class tomorrow without a whole bunch of extras. I do appreciate everybody being here.